Welcome, ladies and gentlemen, to Commodity TV. Today with a company update of Canada Nickel. Therefore, this video is produced and paid for on behalf of Canada Nickel. Indonesia's announcement that it will reduce its approved nickel ore production quotas from 379 million tons in 2025 to 250 to 260 million tons this year has given the nickel market new momentum. The LME nickel price jumped to almost $19,000 per ton at times in January. Even though Indonesia still has to prove that it will comply with its self-imposed restrictions, the announcements have certainly provided new impetus both in terms of the nickel price and the search for alternative sources. After all, the Southeast Asian country is the undisputed leader, accounting for around 65% of global nickel mine production. Parallel to the planned reduction in quotas, structural demand for nickel continues to rise. Analysts expect the market to grow at a compound annual growth rate, a CAGR, of 4.36% until 2031. The volume could increase from around 3.55 million tons to around 4.39 million tons. The storage boom is increasing demand for battery metals. Nickel remains a key component, especially in high-energy EV cathodes, while stationary storage is often LFP-based. These battery storage systems release excess green energy when there is little sunshine or wind. The faster electric vehicles, grid expansion, and energy storage grow, the more demand for battery metals increases, and nickel remains a key component, especially in the EV segment. This creates exciting growth opportunities for emerging producers such as Canada Nickel, which is well on its way to becoming a major nickel supplier outside Indonesia. According to the bankable feasibility study, Crawford ranks among the world's second largest nickel reserves according to Wood Mackenzie. At the same time, the study shows a very low CO₂ intensity of 2.3 tons CO₂ per ton of nickel equivalent or 4.8 tons CO₂ per ton of nickel in concentrate, which is significantly below the usual carbon dioxide emissions in nickel production. In addition, the PFS provides robust metrics: after-tax NPV of $2.5 billion and 17.1% IRR, which protected carbon capture and storage tax credits, increasing this to $2.6 million in NPV and 18.3% IRR. At the peak of the planned 27-year mine life, Crawford could produce a total of 48,000 tons of nickel per year, or 1.6 billion tons of nickel, 58 million tons of iron, and 2.8 million tons of chromium over the entire 41-year project life. All this at a low total production cost of just $1.54 per pound US dollars. This profile is rounded off by the BFS cash flow figures. During the 27-year peak period, annual free cash flow of around $546 million per annum and annual EBITDA of around $811 million per annum are reported. Over the entire 41-year project life, the annual figures are around $667 million per annum EBITDA and $431 million per annum free cash flow. On a byproduct basis, the net C1 cash cost over the life of the mine is just $0.39 per pound of nickel, according to Wood Mackenzie. This positions Crawford in the first cost quartile of the cost curve. Last but not least, Crawford was recently designated by the province of Ontario as one of selected few one project, one process projects. This is not only underscores Crawford's strategic importance, but may also further increase interest from strategic investors. Accordingly, Canada Nickel is now focused on obtaining provincial and, if necessary, federal approvals, as well as a complete financing package in order to continue to pursue its schedule in a disciplined manner. At the same time, the company is consistently advancing the development of its Timmins nickel district. With 8 resource estimates now published, the district is one of the largest nickel sulfide areas in the world, according to the company. The update to REIT's resource estimate is in line with these promising dimensions. In the measured and indicated category, nickel content increased by 46% to 2.1 million tons, including a higher grade domain of 0.77 million tons at 0.25% nickel. Inferred resources increased by 47% to 3.2 million tons of contained nickel, including also a higher grade domain of 0.98 million tons at 0.24% nickel. As mentioned above, Timmins now comprises 8 deposits with a total of 10.13 million tons of measured and indicated nickel resources in 4.3 billion tons grading 0.24% nickel and to 12.5 million tons of inferred nickel resources in 5.4 billion tons grading 0.23% nickel. Back in December, Canada Nickel published its first resource estimate for Midlothian and Bannockburn. Also with great numbers and grades. More information about that you can find in the press releases. In order to bring its flagship Crawford project to the construction decision stage, Canada Nickel has concluded a $32 million bridge loan facility with Auramet. The loan not only underscores the financial market's confidence in Canada Nickel's growth strategy, but also supports the company in positioning itself as an emerging nickel producer in Canada outside of Indonesia. So, what do you think about it? What's the conclusion? In my point of view, Canada Nickel's portfolio, reserves and exploration potential in a Tier 1 nickel district outside Indonesia are becoming increasingly attractive and strategically important, partly because the reduced concentration risk in nickel supply. Added to this is Canada Nickel's vision of establishing a zero-carbon industrial cluster in the Timmins Cochrane region with the aim of benefiting from corresponding tax credits in the future through large-scale carbon capture and storage. You can also find all the information in our Commodity TV app in German and English, along with everything you need to know about commodities. Please note the disclaimer displayed. The stock discussed is or will be part of the SRC Mining Special Situation Certificate, and SRC HG and/or SRC employees may hold shares in the company. Thanks for watching us, and bye-bye from Switzerland.